All right, let's dive into something that caught my eye in the world of crypto today. Gary Gensler, the chair of the SEC, has been making headlines with some pretty significant statements about Bitcoin and the overall crypto landscape.
Yes, and it's important to understand why his words carry so much weight. The SEC is essentially the watchdog for U.S. financial markets, ensuring fair play and investor protection. When Gensler speaks, the crypto world listens.
And he dropped a bombshell, right? He came out and said straight up that Bitcoin is not a security. They're classifying it as a commodity instead. Now, I know security versus commodity might sound like financial jargon, so how about we break that down?
Absolutely. Think of it this way. A security is like owning stock in a company. You're buying a piece of that company and its future earnings. A commodity, on the other hand, is more like owning a raw material, like gold or oil. It has its own inherent value separate from any specific company.
So where does that leave Bitcoin in terms of regulations?
Great question. Securities fall under strict SEC regulations, which involve lots of paperwork, disclosures, and oversight. Commodities, while still regulated, have a bit more breathing room. They're primarily overseen by the CFTC, which has a different set of rules. So this distinction is a big deal for Bitcoin and its future.
It's a big sigh of relief for a lot of Bitcoin enthusiasts out there. But then the article goes on to talk about altcoins, all those other crypto projects out there. And things get a little murky. Gensler was much more cautious about them, hinting that many could be considered securities. What would that even mean for those projects if they were labeled as securities?
Well, imagine needing government approval for every single crypto trade you make. That's the potential impact of these regulations. We're talking increased scrutiny, a mountain of paperwork, and a whole lot of hoops to jump through, both for the companies behind those altcoins and for individual investors.
So a lot more complexity and potentially more roadblocks for those altcoins. Definitely something to keep an eye on. But before we get too deep into the regulatory weeds, let's switch gears to another force that's sending ripples through the crypto market: China's economy.
Yes, and this is where things get really interesting. The article highlighted China's recent economic stimulus efforts, which are essentially massive cash injections into their system. Now, you might be wondering, what does this have to do with Bitcoin? Well,
Hold that thought, because this is where we're going to pick up in part two, right after a quick break. All right, we're back. We were just about to unpack China's economic moves and how they might be connected to the world of crypto.
right.
You were about to explain how injecting cash into their economy could impact something like Bitcoin.
Right. So imagine you're in China right now, and the government is pumping money into the economy.
Okay.
One potential side effect of that is inflation.
Mm-hmm.
Your money might be worth a little less tomorrow than it is today.
Right.
Historically, in times like these, people have turned to assets like gold to protect their wealth from being eroded by inflation.
And Bitcoin has often been touted as digital gold, a sort of
So-
safe haven in the digital age.
Exactly, and we're seeing that play out right now.
Okay.
The article mentioned IBIT, a massive institutional investor known for its very data-driven approach.
Right.
They just poured over $100 million into Bitcoin.
Wow.
They clearly see something here, especially given the regulatory clarity we discussed earlier in the U.S.
That's a powerful signal coming from a player like IBIT.
Yeah.
They're not just throwing darts at a board.
Yeah.
It seems like they believe in Bitcoin's long-term potential, especially in the current economic climate.
It's definitely something to consider.
Yeah.
And speaking of the economic climate, the article also touched on something that's been on a lot of people's minds: U.S. debt.
For sure.
It's getting harder and harder to ignore those numbers, even if you're not a financial expert.
But why should the average person, especially someone interested in crypto, care about U.S. debt? What's the connection there?
Well, when people start feeling uncertain about the economy, whether it's because of rising debt, inflation, or other factors, they naturally start looking for alternatives to protect their money.
Okay.
Some might turn to gold, others to real estate, and yes, some might see crypto as a potential safe haven.
So it's like this ripple effect.
Yeah.
Uncertainty makes people antsy. They look for alternatives. And suddenly crypto, with its decentralized global nature, starts to look pretty good to some.
Precisely. And remember, unlike traditional markets, crypto trades 24/7. That accessibility during times of global uncertainty can be a big draw for investors.
That makes a lot of sense. But it's not like the U.S. is just sitting back and letting its economy go haywire.
Right. There are always efforts to stabilize things,
Yeah.
but it's a complex balancing act. And sometimes those efforts can have unintended consequences.
Okay.
For example, printing more money to stimulate the economy can also lead to inflation, which further undermines confidence in traditional systems. It's a bit of a vicious cycle.
So it's like trying to put out a fire with gasoline.
Yeah.
You might put out one flame, but you risk creating a bigger problem.
That's a vivid analogy, but you're getting the idea.
Yeah.
It's a delicate dance, and the decisions made by governments and central banks have far-reaching implications.
And it sounds like those implications extend beyond traditional markets and right into the world of crypto.
Absolutely. Crypto doesn't exist in a vacuum.
Right.
It's influenced by global events, economic trends, and even political decisions. That's
Yeah.
part of what makes it so fascinating, but also incredibly complex.
And potentially volatile, right?
Yeah.
I mean, we've seen Bitcoin go on those wild swings in the past.
Volatility is definitely a factor to consider.
Yeah.
But it's also important to remember that volatility can cut both ways.
Yeah.
It creates risk, but it also creates opportunity.
So what does this all mean for someone who's just trying to wrap their head around the crypto landscape? What should they be paying attention to?
That's the million-dollar question, isn't it? I think the key takeaway here is that crypto is becoming increasingly intertwined with the global economy. Understanding these macro trends, things like government regulations, economic stimulus measures, and global uncertainty, can provide valuable context and help you make more informed decisions.
It's like you can't just look at the price of Bitcoin in isolation anymore.
Right.
You have to understand the bigger picture, the forces that are pushing and pulling it in different directions. It's like trying to predict the weather, right? You've got to look at the temperature, the wind, the barometric pressure, all these different factors that play a role.
Exactly. And just like with weather forecasting, the more data points you have, the clearer the picture becomes. We've focused a lot on the regulatory and economic factors influencing cryptocurrency today, but there's a whole other layer to consider: the technology itself.
Right. Blockchain technology. It feels like every other day there's a new breakthrough, a new application, a new buzzword to try and understand. What should people be paying attention to on the technological front?
Well, one of the most exciting areas is the development of decentralized finance, DeFi for short.
DeFi, right.
This is about creating a whole financial system that operates on the blockchain without the need for traditional intermediaries like banks.
So cutting out the middleman, that sounds pretty revolutionary.
It has the potential to be. Imagine being able to borrow, lend, and even invest directly with others, all through secure, transparent, and automated smart contracts on the blockchain. That's the promise of DeFi.
Wow, that's a lot to wrap your head around. And it makes you wonder, what does this all mean for the future? Where do we go from here?
That's the billion-dollar question, and honestly, anyone who claims to have a crystal ball is probably trying to sell you something. But I think what's most exciting is that we're still in the early innings of this technology. It's like the early days of the internet. We're just beginning to scratch the surface of what's possible.
And just like the internet, crypto has the potential to disrupt industries, reshape economies, and maybe even change the way we think about money itself.
Absolutely. And that's why it's so important to stay informed, stay curious, and keep asking questions. This deep dive has been a great starting point, but don't let the learning stop here.
Exactly. Keep exploring, keep digging, and who knows? Maybe you'll be the one uncovering the next big thing in the world of crypto. Thanks for joining us on this deep dive. Until next time.